sopan di sehari-hari kerja ternak sapi sama bertani. Kalau dapat dari susu sehari, kalau 1 ekor sapi 15 liter. Rupa-rupa kalau kebun ada tomat, ada burkol, ada buncis. Yang paling sering panen buncis kilo. Kalau sekarang 5.000. Kalau punya uang gitu langsung ditabung ke bank, pulang lagi ke sini paling mudah. Udah lama kalau nabung dari tahun 95-an. Iya, kalau nabung buat anak sekolah, buat kebutuhan sehari-hari, ya sisanya itu ditabungkan sama bapak yang tadi diceritakan. Itu rumah tangga dulu buat di rumah, kalau ada sisa-sisa itu buat anak sekolah, buat modal lagi ke depan. Kalau sisanya ditabung di bank. Grogi itu, aduh, kenapa jadi begini gitu. Alhamdulillah itu udah ada info dari bank. Di bank itu sudah ditangani oleh LPS. Saya senang lah. Terima kasih kepada FPS.
Pak udah nggak grogi?
Enggak takut sekarang.
Bapak kapok tuh Pak?
Enggak kapok. Masih mau. Karena masih punya anak kecil-kecil. Alhamdulillah percantan. Ngedengar ada bang gini-gini enggak itu saya mau terus nabung aja buat kebutuhan anak.
Honorable Mr. Purbaya Yudi Sadewa, the Chairman of Indonesia Deposit Insurance Corporation, the Honorable Mr. John Frost, Senior Economist of Innovation and the Digital Economy Unit, Bank for International Settlements, the Honorable Mr. Iman Shah, Deputy Commissioner of OJK Institute and Digital Finance, Indonesia Financial Services Authority, the Honorable Mr. Indra Utoyo, the Director of Digital and Information Technology, PT Bank Rakyat Indonesia, Persero Tbk, the Honorable Mr. Carlos Colau, the Senior Expert of Spain Deposit Insurance Agency, Excellencies, colleagues, ladies and gentlemen, good afternoon and welcome. My name is Sarah Wayne, and on behalf of the Indonesia Deposit Insurance Corporation, I would like to welcome you to our event this afternoon. Today, ladies and gentlemen, the Indonesia Deposit Insurance Corporation, or IDIC, is holding its international webinar entitled The Rise of Digital Banking and the Future of Deposit Insurance System. We believe that the rise of digital banking is extremely important for the future of deposit insurance system, and therefore, IDIC brings forward this webinar along with prominent and reputable speakers, which aims to exchange and share knowledge. And ladies and gentlemen, on top of bringing conducive and fruitful discussions to the table in respect to the future of deposit insurance system to help us better address the global and also dynamic changes of the economics, especially in the current unprecedented situation of the pandemic, as well as bringing out ideas on how to manage the rise of digital banking even better. It is an honor, ladies and gentlemen, to host the webinar for today. And we have a packed 2 hours ahead of us, where we will hear a welcoming remark from Mr. Purbaya Yudi Sadewa, the Chairman of Indonesia Deposit Insurance Corporation, or IDIC. And further on, we will have Mr. Herman Saherudin, the Director of Research Group of Indonesia Deposit Insurance Corporation, who will be moderating our panel discussion this afternoon. And as for our esteemed speakers, ladies and gentlemen, for this afternoon's discussion, we have Mr. John Frost, the Senior Economist of Innovation and the Digital Economy Unit, Bank for International Settlements. And Mr. Frost will be presenting about fintech, big tech, and digital banking, the global trends. And for our second speaker this afternoon, we have Mr. Iman Shah, the Deputy Commissioner of OJK Institute and Digital Finance, Indonesia Financial Services Authority, and Mr. Iman Shah will be presenting on the implications of responsible digital financial innovation to banking business. And our third speaker, ladies and gentlemen, we have Mr. Indra Utoyo, the Director of Digital and Information Technology of PT Bank Rakyat Indonesia Persero Tbk. And Mr. Indra Utoyo will be presenting on the implications of fintech digital banking for banking business as well. And our fourth speaker for this afternoon, we have Mr. Carlos Colau, the Senior Expert of Spain Deposit Insurance Agency, and Mr. Colau will be presenting about the implications of fintech or digital banking for banking business, fintech and digital banking view from DGS perspective. And ladies and gentlemen, of course, we'd like to invite everyone to please join our discussion this afternoon by submitting your questions through Slido. As you can see here, we have the QR code on your screen where you can be connected to Slido to submit your questions. And don't forget to use the hashtag IDIC to retrieve the Q&A page. And ladies and gentlemen, we also seek your valuable input by completing a quick survey that has been prepared by the committee, and it is also available through Slido through the same QR code below. And for those of you who would like to retrieve the presentations on today's afternoon's discussion, we have a separate QR code which is also presented on your screen below, and you can scan the QR code and download the presentations or access it through the web address stated on your screen. So ladies and gentlemen, without further ado, we will start today's event with a welcoming remark from the Chairman of Indonesia Deposit Insurance Corporation, Mr. Purbaya Yudi Sadewa. Mr. Purbaya, the screen is yours.
The Honorable Mr. John Frost, Senior Economist, Innovation and Digital Economy Unit, Bank for International Settlement, Mr. Carlos Colau, Senior Expert, Spanish Deposit Insurance Agency, Mr. Iman Shah, Deputy Commissioner of OJK Institute and Digital Finance, Indonesian Financial Service Authority, Mr. Indah Utoyo, Director of Digital and Information Technology, PT Bank Rakyat Indonesia, who is also my senior at the University of at ITB ya, Bandung. Apa kabar Pak Indra? Sehat Pak? Excellencies, colleagues, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. May peace be upon us all. Om Swastiatsu, Namo Buddhaya, greeting of virtue, good afternoon, and good morning, depends on your time zone. Ladies and gentlemen, it is my pleasure as the chairman of the Indonesia Deposit Insurance Corporation to welcome all of you to our virtual webinar series today with the title, The Rise of Digital Banking and the Future of Deposit Insurance System. First of all, I would like to extend my sincere gratitude to our four distinguished speakers today. The first, Mr. John Frost from Bank of International Settlement, Mr. Carlos Colau from Spanish Deposit Insurance Agency, Mr. Iman Shah from Financial Service Authority or Otoritas Jasa Keuangan, and Mr. Indra Utoyo from Bank Rakyat Indonesia, for taking your time to share your knowledge, experiences, and thoughts about digital banking from your perspectives. It is really our privilege and honor to have you all here today. I would also like to thank the IDIC International Affairs team for arranging this great seminar. Ladies and gentlemen, we have lived alongside the COVID-19 pandemic for more than 1.5 years. New challenges have surfaced for institutions all over the world and have altered both consumer and producer behavior, as social mobility and close contact activities are being constrained to mitigate the spread of the virus. Before the pandemic, digital technologies have actually been rising rapidly due to the ability to pack more and more transistors onto a silicon chip, which has grown exponentially according to Moore's law, and the rapid development of internet infrastructure all over the world. However, digital transformation at that time was an option for an institution or company, depending on its available resources and nature of businesses. The pandemic has been shifting the optional nature of digital transformation to become transformed to digital or losing in competition. The global public health crisis in turn becomes the super catalyst that speeds up the adoption of digital technology in almost all business sectors, including the banking sector. This is why all over the world, including in Indonesia, we have seen more and more banks are driven to beef up their digital services for their customers, which has improved the bank customer experiences greatly. Several banks have been transforming or refocusing their businesses or business segments to digital banks, which have been providing one-stop banking services to customers through the internet in more convenient and efficient ways. In an ideal design of digital banking, bank customers should be able to feel like having access to a bank branch that opens 24 hours a day, 7 days a week. And the banking services are delivered to them through digital services that are intuitive, easy to use, customized, and secure. I believe this trend will continue further all over the world as the pandemic has brought us to the new era, the new normal, the twilight of digital era. Ladies and gentlemen, though I believe that we all agree on how important digital innovation will improve our life in every aspect greatly, through a speed of light transformation, we should stay aware that innovation does not come with zero risk. Whether it is digital banking or traditional banking, they both are still the fractional reserve banking in which banks may lend funds on deposits. Therefore, in terms of risk, as with traditional banking business model, digital banking incurs similar risks. We might be well aware that certain type of risks may become more pronounced in digital banking, such as digital compliance and cybersecurity risks, as well as other types of operational risks related to the digital technology. These risks are not unique to banks that have undergone extensive digital transformation. Nonetheless, the risk might become more pronounced in digital banking compared to that of banks that employ a more traditional brick-and-mortar banking model. Therefore, I would like to underline the importance of prominent risk management practices by both traditional as well as digital banks. A well-functioning and synergic financial safety net, which in Indonesia consists of Bank Indonesia, the central bank, Financial Service Authority, OJK, Indonesia Deposit Insurance Corporation, IDIC, and Ministry of Finance, is also playing a pivotal role in maintaining the financial system stability. Ladies and gentlemen, IDIC is mandated by the laws and the deposit insurer and bank as the deposit insurer and bank resolution authority. All commercial banks and rural banks in Indonesia are the member of IDIC's deposit insurance scheme, including digital banks. As of September 2021, IDIC covers about 372.2 million of bank accounts, or 99.92% fully, whose deposit balances are below or equal to the statutory deposit insurance coverage of 2 billion rupiah per deposit per account. This is around 35.1% of Indonesia's GDP per capita in 2020. Looking forward, IDIC urges the needs for more research on digital banking services in order to produce potential policy necessary, which will promote more confidence in banks engaged in digital banking and financial stability. Furthermore, it is important for regulators, including IDIC, to enhance their digital capabilities to keep up with the digital transformation in the banking industry. Another aspect that may be worth noting is in terms of the development of the digital banking products and digital banks are financial and digital literacy. An increase in financial inclusion should be balanced with the increase in financial literacy as well as digital literacy so that bank customers can benefit optimally from the digital transformation. Ladies and gentlemen, concluding my remark, allow me to remind everyone that the digital transformation is inevitable. Thus, we need to prepare ourselves accordingly. I trust that in this one-day webinar, we are providing a suitable platform to stimulate inspirations and initiatives on the development of digital banking, its prospects and challenges ahead, as well as the role of supervisory and resolution authority to support the banking digitalization. Once again, on behalf of the Indonesia Deposit Insurance Corporation, I thank you all for your participation and hope you all have an inspiring and fruitful discussion. Thank you very much.
And we thank you, Mr. Purbaya Yudi Sadewa, for the wonderful welcoming remarks. And now, ladies and gentlemen, we will kick off our meeting for this afternoon by highlighting the rise of digital banking and the future of deposit insurance system in the midst of the current global pandemic. I will now hand over the session to Mr. Herman Saharudin, the Director of Research Group of Indonesia Deposit Insurance Corporation, to moderate the exciting discussion ahead of us. But before I do that, ladies and gentlemen, please do allow me to remind you to please submit your questions through Slido by scanning the QR code on the screen or by typing the hashtag IDIC to start submitting your questions. And now, ladies and gentlemen, please join me in welcoming our moderator for this afternoon's discussion, Mr. Herman Saherudin. Mr. Herman, the screen is now yours.
Well, thank you very much, Ms. Sarah Wayne, for the very good introductions. So good afternoon and good morning, everyone, depends on your time zone. Please allow me to introduce myself. My name is Herman Saherudin. We hope everyone is healthy during these times, and I would like also to thank the International Affairs team of IDIC for arranging this great seminar. So as Ms. Wayne has mentioned before, we have a jam-packed informative panel discussion in front of us today. So please join me in welcoming our esteemed speakers today. So the first one is Mr. John Frost, who is the Senior Economist of Innovations and the Digital Economy Unit Bank for International Settlements, BIS. How are you today, Mr. Frost?
Very good.
Very good.
Good
That's
afternoon,
great.
and thank you very much for the invitation.
Excellent. Thank you so much. And now let's turn to our second speaker. Our second speaker is no other than Mr. Iman Shah. He is the Deputy Commissioner of the OJK Institute and Digital Finance, Indonesia Financial Services Authority, or OJK. How are you today, Mr. Iman Shah?
Thank you. I'm good, Pak Herman. Thank you.
That's great. Thank you so much, Mr. Iman Shah. We are really glad and grateful to have you here. Thank you so much. And let's turn to our third speaker. Our third speaker is one of the prominent bankers in Indonesia. He is Mr. Indra Utoyo. Mr. Indra Utoyo is the Director of Digital and Information Technology for PT Bank Rakyat Indonesia Persero, or BRI. How are you today, Mr. Indra?
I am good, Pak Herman.
Oh, that's really great. Okay, thank you so much. And lastly, we have Mr. Carlos Colau. He is the Senior Expert of Spain Deposit Insurance Agency. How are you today, Mr. Carlos?
Great, thank you very much.
Thank you very much.
Here.
Yeah, that's really great to see you again in seminars. We have met before in the previous seminars, and again, thank you so much for your time to join our great seminars. So,
thank you.
As you can see, we have amazing lineup of speakers today, and I am confident that we will have a really great panel discussion shortly. And before we begin, I would like to remind everyone to join our discussion today by submitting your questions through the Slido. You can scan the QR code on your screen, where you will then be connected to the Slido to submit your questions. Don't forget to use the hashtag IDIC to retrieve the Q&A page. So now I would like to welcome our first speaker, Mr. John Frost, which is a Senior Economist in Innovation and the Digital Economy at the BIS. He conducts policy-oriented research on fintech and digital innovation, so he is really knowledgeable in these sessions together with the other prominent speakers. Previously, Mr. Frost worked at the Financial Stability Board, the Dutch Central Banks, and VU University in Amsterdam, and in the private sectors in Germany. Let's welcome with a big applause Mr. Frost for his presentations on fintech, big tech, and digital banking global trends. Mr. Frost, the screen is yours.
Thank you so much, Herman, and thank you very much for the kind introduction to be here today. It's really an honor to be able to speak to this group and to be able to share some insights from the research that we've done at the BIS. So we can pull up the slides that I'll be using. I will be drawing from research that we've done at the BIS with co-authors, and we've made the links available so that everyone who would like to read the papers in more depth and further understand the research can feel free to do so. We can go to the next slide. And what I'll be talking about is fintech, big tech, and digital banking more generally. I'll be sketching some global trends and, of course, thinking about what this means for the ASEAN countries and specifically for Indonesia. And I look forward also to discussing and to answering questions from the audience on these issues. Let me state at the outset that these are my views, not necessarily those of the Bank for International Settlements. We can go to the next slide. So we often talk about fintech as a phenomenon, and we talk about the fintech ecosystem. But another way of thinking about fintech is as a tree. And this is a great paper from our colleagues at the Financial Stability Institute, Johannes Ehrentraut, Denise Garcia Ocampo, and others. They think about a taxonomy of the fintech environment, distinguishing between the roots, the trunk, and the leaves and branches of the tree. And if you think about fintech, fintech, of course, has a range of activities. We often hear about online lending, we hear about crypto assets, we hear about different applications of fintech, which we can think of as the branches and leaves of a tree. It's a very wide area that cuts across all the financial services sector. And all of those activities are supported by a few enabling technologies. And those include things like artificial intelligence and machine learning, AIML, distributed ledger technology, biometrics, cloud computing, etc., application programming interfaces. But if you think about the roots, what makes the fintech tree strong? What allows it to stand upright? It's really these policy enablers. It's sound regulation, it's sound infrastructures, legal frameworks. And that's something that the public sector provides, and indeed institutions like IDIC. If we go to the next slide, this comes from research that we've done looking at investment in fintech around the world. And certainly if you look at venture capital, private equity, mergers and acquisitions, public listings, you can see that investment in fintech companies has increased very rapidly in the past 10 years. So this is between 2011 and 2021, shown here on the graph. And you can see that investment was initially quite concentrated in a few jurisdictions, especially the United States, the European Union, the UK, and China. But over time, it's become much more diverse. There's a more diverse landscape. There's fintech investment in countries all over the world. And indeed, a standard measure of concentration in the market has fallen quite a bit, showing that we have a more diverse and less concentrated investment landscape globally. And we see a similar pattern. We're looking across different sectors. So we have different market segments in fintech. And again, we see that the sector has become more diversified over time, with investment going to many different areas in fintech, including recently a lot of cryptocurrency and blockchain companies, but also in payments, in insurance, in big data and AI, in e and mobile commerce, etc. Now, if we go to the next slide, for this audience, of course, we're especially interested in banking, in digital banking, and in fintech applications that really look like the traditional business of commercial banks. So I want to focus especially on credit and talk about fintech and big tech credit. First of all, what are they? What is fintech credit? What is big tech credit? Well, fintech credit, of course, is one segment of the broader fintech ecosystem. If we think of fintech in a broad way as technology-enabled innovation in financial services, think of applications in payments, in insurance, in lending, in investment. Fintech credit is really just one segment of that. It's credit activity that's facilitated by electronic or online platforms that are not operated by commercial banks. Traditionally, this included peer-to-peer or P2P lending, also called marketplace lending in some jurisdictions. And these are often platforms that match borrowers and savers directly. So Zopa or Funding Circle in the UK, Lending Club, SoFi in the United States, Lufax, Harmony, Mintos. These are just a few examples of these fintech credit platforms that match borrowers and savers in a somewhat different way than a commercial bank, but nonetheless perform a similar function in terms of credit to consumers and businesses. And if we think about big tech, it refers to large companies whose primary activity is digital services rather than financial services. And of course, these are companies that are familiar to many of us, Ant Group and WeBank in China, part of the Tencent ecosystem and the Alibaba ecosystem. Also Amazon or Facebook or Google in the United States and many countries. Interestingly, in Southeast Asia, there are quite a few big tech companies that are important as well. In Indonesia, of course, Gojek and Tokopedia are important companies. Grab is also active across Southeast Asia. And companies like Mercado Libre in Latin America, Vodafone and M-Pesa in Kenya and many other African countries. And many of these companies, in addition to providing payments and insurance and wealth management, they facilitate or directly provide credit. And this can be, for instance, e-commerce platforms often provide loans to the sellers who sell things on their platforms. They might also offer buy now, pay later services to purchasers of goods and services on their platform. In some cases, they work together with financial institutions and they facilitate credit. So the big tech doesn't necessarily offer credit directly, but it helps to link its users with the financial institution that offers credit. And in some cases, it can also use the big data generated by the platform, by e-commerce, by social media, by ride-hailing. And that data can be very useful to price credit, to assess credit risk, and then to extend credit to new borrowers who may not have been included previously. If we go to the next slide, I just wanted to show the global trends. And this is based on our research, updated recently to cover also 2020, so the first year of the COVID-19 pandemic. And what's very striking is that fintech and big tech credit both have been increasing in general, but especially in the last years, big tech credit has grown further, and it grew further even during the COVID-19 pandemic. Fintech credit, again thinking of peer-to-peer marketplace lending, is growing in most countries, but it's been shrinking fairly rapidly in China as platforms, P2P platforms, continue to exit the market, also due to regulatory intervention. And we can see that big tech credit is becoming economically meaningful in some jurisdictions. So in some African countries like Kenya and Ghana, we already see that the ratio of big tech credit to the total stock of private credit is at or above 10%. In countries like China, Korea, and to some extent also Russia and Indonesia, we see as well that these markets are becoming important and they are indeed serving quite a few individuals and small businesses. I'll say right here that the data for Indonesia are subject to some uncertainty, and we're working to further refine the estimates so that we can have good numbers as to big tech credit in Indonesia also for 2020. If we go to the next slide, we have also looked at the drivers of fintech and big tech credit. So what explains their growth? What explains the fact that these forms of credit are very important in some countries, but not in others? And one thing that may be quite obvious is it's related to economic development. Certainly in countries with a higher GDP per capita, we see deeper credit markets in general, and we also see more fintech and big tech credit. But what's more surprising is the other factors. So for instance, we see higher fintech and big tech credit in jurisdictions with a more concentrated banking sector and higher banking sector markups. So where the banking sector extracts a larger spread between deposit and lending rates, where there's a higher premium on financial products, which may imply a lack of competition or high market power, there we see that fintech and big tech credit have made a larger entry and are more important. We also see that where there are fewer bank branches relative to the adult population, there's more fintech and big tech credit. So this may imply that in these markets, there's an unserved, unmet demand for bank services. And indeed, in those markets where there are very few bank branches, we see that there's more fintech and big tech credit. We also see an impact of regulation, where banking regulation is less stringent, particularly in kind of an initial stage of development. We see higher fintech and big tech credit. But interestingly, especially for the later stage, as these markets develop further, we see that the adoption of specific fintech regulation, a regulatory framework that, for instance, enables crowdfunding or other forms of fintech credit that's specific to that sector, that can actually be very helpful to increase overall volumes. It might create regulatory clarity that allows new institutions to enter and to grow. If we go to the next slide, there are some key differences between fintech and big tech firms. In particular, we've seen that these fintech platforms, the peer-to-peer and marketplace lending platforms, often have, they've initially had very high returns, but over time that's trended down somewhat. So the investors in these platforms have seen somewhat lower returns as the market has matured. And we also see that there are big differences in profitability. So if you look at the right-hand panel, big tech firms are very highly profitable. Often they have a core business with advertising, social media, e-commerce, where they have very high margins. So they have very high profits. And fintech credit platforms have often struggled to achieve profitability. So, especially in early stages for newer firms, it's common to have negative profits. But we haven't really seen that move into positive profits in a consistent manner across the sector. So this means that big tech firms have more resources to expand into financial services. They may see, an ability to connect their financial businesses to their non-financial business lines, and this gives them, some key advantages that may explain why big tech credit has expanded so much more rapidly than fintech credit in the last few years. If we go to the next slide, then we dig into this further. We also see that incumbent financial institutions, so commercial banks, are adopting a similar business strategy. So in many cases, they are becoming like fintech and big tech companies by adopting a platform-based business model. And indeed, if you compare different banks, those that have more of a platform-based business model that's similar to fintechs and big techs versus those that have more of a traditional business model, you do see some striking differences. Those banks with a platform-based business model have higher non-interest income. So this means they earn money from fees by matching their clients with perhaps a third-party financial services provider. So they earn their income more through fees rather than through the spread between deposit and lending rates. And you can see that these banks that have a platform-based business model also spend more on technology than their peers. So these banks are becoming indeed more of a digital platform. They are offering banking as a service. They're connecting their clients with third-party providers of financial services, and these banks are indeed seeing growth from this, and also have seen success during the COVID-19 pandemic, where banks with more of a traditional business model have sometimes struggled. If we go to the next slide, I wanted to talk a little bit about the implications of these trends. So one implication of fintech and big tech and platforms has been its contribution to financial inclusion. And we see in a number of jurisdictions around the world that access to transaction accounts has increased quite a bit. So this graph shows the percentage of adults with access to a transaction account across major regions of the world. This is from the World Bank Findex data. And as we know, this has been increasing since 2011. The 2021 data will be available at some point from the World Bank, and it'll be very interesting to see how this has continued to develop. We see especially in South Asia, for instance, where the India stack and the Aadhaar digital ID have been applied, and a new ecosystem with more fintech and big tech players has emerged. We see some big improvements in financial inclusion. We also see improvements in sub-Saharan Africa, where mobile money has become important. And notably in East Asia and Pacific, there we see some very dramatic gains that are driven, by a mix of fintech players, the big tech providers, and also, as mentioned, these incumbents that are adopting more of a platform-based model. So these are the benefits of these trends. But if we go to the next slide, there are also a few risks. I think one of the most important risks is this idea of dominance, market domination by large platforms, and particularly the big tech players. I mentioned the big tech players have a number of advantages, and these can be very powerful to enhance financial inclusion, to grow fast, and to introduce new innovative products. But we also see in many markets that big techs can dominate the payments market. So in China and India, for instance, we've seen these big tech players grow very large. In China, 2 players control 94% of the mobile payments market. So it's really a duopoly. And in India as well, we see that big techs together have about 95% of payments in the unified payments interface. It's a little more distributed. There are 2 or 3 big players, but nonetheless, we see a very high level of concentration. If we go to the next slide, we also see this concentration in other areas, for instance, in cloud services. And at the global level, it's really just 4 players that jointly control about 2/3 of the cloud services market. So here as well, we see this tendency that the big techs, which are very active in financial services, are also very active as vendors to financial institutions. And of course, if anything would happen to one of these players, if there were a major cyber event, if there were insolvency, if there were some unintended operational event, that could affect many financial institutions at the same time, and that could indeed be a financial stability risk. Now, let's go to the next slide. Let's talk just briefly about policy approaches. So authorities around the world in advanced economies and emerging market economies face similar challenges. They're trying very much to harness the benefits of digital banking, of platforms, big techs, fintechs, incumbent platforms, but also to mitigate these policy risks, including the risk of domination of markets, anti-competitive behavior, etc. So they face broadly 3 approaches. The first is to apply existing financial regulation, competition, and data protection rules. But in some cases, these existing approaches may fall short. They might not be able to address the risks that are unique to new fintech and big tech firms. So a number of authorities are adapting old regulations and adopting new rules in these areas. We see a number of countries that are taking measures that are specific to big tech, entity-based requirements in many cases, also new data protection laws that seek to address some of the data use issues. And finally, authorities can provide public infrastructures. Digital identity is something that's been very powerful. Fast payment systems have been very useful, as we've seen in India. But we could also consider central bank digital currencies to be an example of these public infrastructures. For all of these 3 approaches, it's important for central banks and regulators within their legal mandate to work closely with competition and data protection authorities. And there's also a need for international coordination among central banks, competition and data protection authorities to promote regulatory consistency. So let me conclude on the next slide. I'll just recap that fintech and especially big tech credit are growing very fast at the global level. Among drivers, we see that economic and financial development, but also financial regulation play a key role. We see that big tech services can enhance financial inclusion, but the same forces also promote market concentration. And we see this with big techs in payments and in cloud services. I've discussed the different policy approaches to harness the benefits and mitigate the risks, including adapting regulation and building new public infrastructures. And I've discussed the need for policy coordination by central banks, regulators, including, I would say, deposit insurers, competition and data protection authorities. So on the next slide, I just wanted to make a brief plug that for those who are interested, feel free to use the data that we've assembled on fintech and big tech credit. These are made available as a public good for researchers and practitioners. And on the next slide, it just leaves me to say thank you very much.
All right. Thank you so much, Mr. John Frost, for the very comprehensive and compelling presentations. So, again, if I might summarize Mr. Frost's presentations, there are two big points that are very interesting and compelling to us. So, first, there's a big shift in the global fintech landscape in which the big tech companies are rising much more than the small and medium fintechs, both in terms of lending volumes and profits. And then the second one, that there's the need or urgency for policy coordinations among financial regulators and other regulators, including the competition authorities, data protection authorities, as well as regulators in other countries. So again, thank you so much, Mr. John Frost, for the presentations. So next, I would like to move on to our next speaker. Our next speaker is Mr. Iman Shah. He is responsible for capacity building for financial sector, including research and works related to digitalization in the financial sectors. Previously, he spent most of his career in the area of banking policy and regulation in Bank Indonesia. And right now, Mr. Iman Shah is the Deputy Commissioner in the OJK Institute. So again, today, Mr. Iman Shah will be presenting about the implications of responsible digital financial innovations to banking businesses. And again, the second one is a very interesting topic. And Mr. Iman Shah, the floor is yours.
Thank you, Pak Herman, for the introductions. And good afternoon from Jakarta, and to all for the speakers as well as participants. According to your time zones, I think it will be like some things about good morning or good evening. But anyway, it's a great honor to participate in this very important webinar hosting by the Indonesian Deposit Insurance Corporations. So, distinguished Honorable Chairman of IDIC, Mr. Purbaya Yudi Sadewa, honorable speakers, and all the and also the moderators and all participants. Firstly, on behalf of the Indonesia Financial Service Authority, or OJK, I would like to extend my appreciations for inviting me to share insight as well as my understandings with regard to the role of the Indonesian Deposit Insurance Corporations within our domestic sector. Things that the time is very right now when we have this digitalization in financial sector would be bring about something that IDIC in the future have to think over about the role of the IDIC in maintaining the financial stability in Indonesia. So on these occasions, I would like to share some of my understandings and my perspective on the implication of responsible digital financial innovation to the banking business. So thank you for assisting me in presenting my slides. So, well, as moderator mentions before, that I'm currently attached to the OJK as a Deputy Commissioner of OJK Institute and Digital Finance, where I think previously I was attached as well to several assignments from the OJK, and as moderator mentions, I spent most of my career previously with the Bank Indonesia in the area of banking policy and regulations. So hopefully those background will help me to how I'm presenting my slides later on, and hopefully we can have further discussions after my presentation. So next slide, please. The presentations, I would like to cover three areas. One is about how I'm going to share with the participants all things that related to the COVID-19 and what happened and how it affecting the financial sector in Indonesia. I think John from BIS mentions already about the global trend on fintechs and big tech as well as the digital banking. So I would like to take that insight into our domestic circumstances and how we are then tailor the trend into our financial sector and see whether we can come up with like areas and regulations that really fit to our domestic issues. So that's the first one on introductions. And then the second one area that I want to share as well is about how then OJK come up with the policy initiatives, anticipating and mitigating the risk bring about by the pandemic, and then come up with the idea when we touch the area of digitalization is when we issue the regulations concerning the commercial bank, and within the substance also talking about digital banking. And the things this is very relevant, I think, and it is very fit with the idea how we can see the future of the Indonesian deposit insurance concerning the digitalization have our domestic financial sector. So hopefully that will all will something that I can share, and maybe it is something that we can discuss further later on. Next slide, please. I won't go slide by slide, but I think I just want to highlight ideas that something that very important for us, and I think that's really trigger our mind and our perspective for the further discussions in more detail with regard to these topics. So when we are talking about pandemics and as well as COVID-19 and digital era, I think we do all realize already what happened when we have this pandemic in our domestic circumstances with the landscape that been adjusted by the pandemic. So I think with the policy coming from the government, how we are having like gun policies and mitigate and limiting the mobility of the people. So I think to some extent, the COVID-19 has accelerated as well the adoptions of the digitalizations, and these two activities are likely to go at once. First is about the new habits that come to the public. One, we are talking about physical and social distancing. Since up to today, we still maintain, even it's becoming lower and lower, but I think still the term that we use is still social distancing and limiting the mobility of the people. The second one that we have to remote working. Still, it's not really recovery yet. Some of us still stay at home. We're not going to school for the students, and also for the staffs, officers still stay at home. And I think, and the other one, I think we are now leveraging a lot on how we are using our smartphone and also talking about these more digitalized activities. And the other two is talking about the new business model. Well, in short, this is the time that we are now becoming more familiar with digital payment, with digital banking, and also that talking a lot already by John Frost in the previous speech about this fintech. And fintech can be one of the player can be the big tech and also the digital itself. So I think that's becoming that quite familiar for us today. So I think with these two are likely to go at once. We're becoming like something that we have to adjust our habit as well in our this. Next slide, please. So how that this pandemic affecting the financial sector? So we can see, I think I just talking about touch three areas of type of risk within our financial sector. One is about credit risk, market risk, as well as liquidity risk. It is very obvious that credit risk is becoming like something that we have to take into account because of this real sector affected already by the pandemic. A lot of NPL, the quality of the loan is lower, and then it will trigger rising of NPL, as well as when we are talking about risk, the volatility, the interest rate risk financial instrument as well as the exchange rate risk from the financial instrument that will affecting as well the income of our financial entities. In terms of liquidity, based on our observation, we can see that the deposits from publics keep increasing because it's really something that we have to consider because of this the real sector activities is quite limited. People may put more their money into the banks other than to spend the money because of this limited or social distancing happen into our society. So then what happened is we can see the transmissions into our the performance of the NPL is potentially increasing, as well as there's a liquidity shortage maybe, and also the some pressure on capital from the financial institutions. And then the policy taken by the government is very much with the features of countercyclical. So it's just mitigating the worsening of the performance of the financial institutions. And I think it's just to supporting still the real sector, and also I think at the end winning the financial system stability. But according to our data, we observe that the CAR of our bank is still strong, above the minimum, high above the minimum at 21.8%, and I think we are very pleased because it is consists of dominantly consists of Tier 1 capital, and in particular against core Tier 1 capital, so it's very strong, our bank's capital. And the other ratio that we can I'm putting here is about the liquid asset and then compare with the non-core deposit is also we can see is above the threshold, and it is showing that the liquidity in our financial sector is ample. Next slide, please. On the other angle of our observations, we are talking about what happened with the digitalizations in our financial sector. So you can see here the number of the physical transaction is going down. The trend is showing us that the data, the physical transaction is going down, and I think in terms of branches also now something that adjusted already. So you can see from the figure here that these two areas, the number of transactions as well as the number of the banks, are really obviously because of the digitalization happen in the financial sector. Next slide, please. So that's really the introductions that I bring about as a bridge to my second areas of my presentations, talking about the IDIC policy initiatives and digital banking. Next slide, please. So I just want to make it very a bit faster. So I think from this slide we can see that I mentioned before that the policy that IDIC taken is more countercyclical in features. So we already extend our regulations regard to the loan restructuring and how we are consider about the asset qualification of loan from the commercial bank as well as the rural banks, that really based on one pillars. So that's really our effort to safeguard the just to mitigate the impact of the pandemic. Hopefully that you can keep the NPLs low, and then it will something that cannot what is affecting badly the how we assess the bank's performance. Because I think when when there's the NPL ratio is something that we consider is one of the when the bank have to do further supervisory actions taken imposed by the supervisor. And I think part of the supervisor action also the IDIC also take to some extent some role on how we are you know taking measures on some banks. So I think that's really what happened right now, and we extend already the regulations up to March 2023. Is that we have to more provide more rooms for the banks to set aside more provisions, and then afterward, then when we have the time for for unwinding the policies, then consider that the banks are ready for the unwinding policies, and that not really badly affecting the capital of the banks, and that will be triggering the exit policy for the banks. Next slide, please. So, in particular for the digital banks, I think OJK has issued POJK 2021 is quite new, and I think when we're talking about digital banks, the definition is quite clear here that digital bank is Indonesian legal entity, so it is still legal entity, or we call in bahasa Badan Hukum Indonesia, and I think the definition also talking about this leveraging on the electronic channels with the absence of physical office other than the head office, so it must be attached to a head office, and I think to some extent they're also using physical office at that way. So Pak Heru Kristiana, the KEPP or the chief executive of the banking supervision mentioned that there is no between bank already provide digital services, digital bank that transform from incumbent bank or digital banks established via a new bank, a full digital bank, but a bank is a bank. So I think the message is strong. So and it is something that we have to honor the view from our chief executive of banking supervision that the bank is digital bank is a bank. So what are the consequences is quite clear as well, right? So it is something that accordingly every single person undertaking public funding in the form of deposits has to gain previously OJK license as a bank, and then the license is given to a physical bank and not to a full digital bank. Hence, a digital bank is considered as the bank subsidiary. I think this is really a key word that we have to understand, that the digital bank right now is a subsidiary from the physical banks. And then afterward, then prudential and risk management regulations, to my perspective or understandings, apply to the digital bank itself as well to the parent bank on a consolidated basis. So I think that's really what happened, and I think that's really the basis for us to bring about later on how we are constructing the future of IDIC. Next slide, please. So I go for the third area, the implication of the digital finance to the IDIC. So the next slide just show us that we are in OJK having like what is it? Sandbox, the regulated sandbox. We have 16 clusters of the digital financial innovations there, and we have 83 eyes that registered by OJK. We have like a clustering into literations and inclusions, and also the funding and inclusion. But the benefit that we have to want to have is we are increasing access funding, in particular for the SMEs, and also the improve public financial literacy, increasing the financial inclusion index. I think that's really also mentioned by the chairman of IDIC before. Next slide, please. So when we have this digital financial innovations, so we are talking about type of financial institutions and fintech collaborations. That is very quite familiar right now. I'm not going to very detail into, but at least we can sum up with like bank can have like collaborations with the fintechs. Bank can have collaboration with the platform the fintechs. Bank can have collaboration with e-commerce, and itself can have a fintech type of collaborations. What happened is there's a trend of right now. What I'm understanding well is about the trend of digital financial conglomerations in our financial sector, and it brings about some complex issues when we are engaged with the issue of the digital financial conglomerations. Next slide, please. And I think the next slide is just talking about the implication of digital finance innovations. It's just like, we're confirming our view on the nature of scope of banking risk. It's becoming more complex. There's a lot of type of new risks other than we already know in our regulations before, a type of risk, but now we're becoming with the collaborations between this bank and also the fintechs. There's a lot of new risks that we have to anticipate, and we have to come up with like measures how we are mitigating the risk in our financial sector. And I think the technology trend is there. Third-party partnership, you have to also to consider key risks associated with the emergence of fintech, prudential supervisions. I think from outside now we are talking about supervisory technology and regulatory technology, and it is inevitable. I don't know whether the IDIC as well talking about you are moving towards adopting the information technology into your role, into your functions, and how you are supervising the financial sector, in particular the bank themselves. So the next slide, I think this is my last slide. Just some thought that I want to share, and I think it is something that we very pleased to be tested by participants, also speakers. The one that I want to share with in this opportunity is a digital bank as an individual entity is still considered accordingly as a bank. This is things mentioned in our OJK regulations. So it means that definition of the banks of a bank therefore remain the same as stipulated in the IDIC law number 24/2004. So there's no like a need to receive again the bank into the IDIC law to my understandings. But I think that's also happened to how we define the deposit, because I think in terms of the as a paying box agencies, IDIC very much concerned with the definition of deposits, right? So deposit of digital bank also be recognized as part of the deposit insurance schemes, subject to comply with the eligible insurance to the IDIC regulations. But something that we have to consider is how we define how we anticipated the potential virtual rush that take place. That's really different from the physical rush that maybe people have to queue for withdrawing their money. But because it's the platform, digital bank is a platform, then it's easy for depositors to move their money from bank to other banks. So, and the third one is about the digital financial conglomerations, because of the concerns of the banks, also the fintech. So I think we have to concern with the systemic risk, with the contingent risk, and the cyber risk. To my understanding, we haven't yet any regulations to measure, to calibrate the cyber risk, and how we put the cyber risk, whether it is part of the Pillar 1 of the Basel Capital Accord, or is part of Pillar 2, or it's just disclosed as part of the Pillar 3 of the Basel Capital Accord. And the last one is adoption of digital bank and digital finance conversion may be used for exercising the effectiveness of bank resolutions methods under the IDIC mandates, talking about the purchase and assumption as well as the bridge bank. I'm thinking about maybe we can explore more how that will be adjusting the role of the IDIC in the future. So I stop here, ladies and gentlemen. Thank you very much for your attentions. I'm looking forward for more discussions with regard to my presentations. And back to you, Pak Herman, as the moderator. Thank you so much. Thank you. And good afternoon.
Very comprehensive presentations on the OJK view on the increasing landscape of the fintech or digital financial service industry. So if I might to summarize several points for the audience here, that the first, during the pandemic, OJK has enacted several policy initiatives that are really strategic, aimed to support the national economic recovery, maintaining financial system stability, blueprints on the banking digital transformations, as well as policy initiatives related to digital bank. So the second one, this is a very catchy phrase that I note from Mr. Iman Shah, quoting from Mr. Heru Kristiana. So a bank is a bank. That is the regulatory and supervisory approach in OJK. So if I might make it simple, the BIB, bank is a bank. So this is related to what Mr. Purbaya Yudi Sadewa, chairman of IDIC, has mentioned in his remarks before, that in IDIC, practically a bank is a bank, whether it's a digital banks or the traditional bank. So all are members of the Indonesia Deposit Insurance Scheme, whether they are rural banks, commercial banks, traditionals, or digital banks. So this shows the synergies, an examples of synergy between financial regulators in Indonesia. In particular, in this sense, is between OJK and IDIC. And the third a point that probably we could take out from Mr. Imansyah's presentation is this: the importance of financial and digital literacy. This is also similar to a point made by Pak Purbaya earlier on, that again, in these very complex trends in digitalizations, it is utmost important for all of us to increase the literacy in terms of financial literacy as well as the digital literacy for the society. And then the last one that I could make is that more research are needed, especially in several areas where this development in the digital innovations in the financial services industry are making industry more complex on the one hand. On the other hand, it's also make the consumers more convenient. So what are the impacts on the regulatory landscape? What are the impacts on the industry? And what are the impacts on the futures developments of the economy, especially in the context of Indonesia? Then those are the questions that are need for more or further research. And this is a really interesting area to explore. Again, thank you so much, Mr. Imansyah, for the presentations. And next, we have our third speaker, Mr. Indra Utoyo. He is the Director of Digital Information Technology from PT Bank Rakyat Indonesia, BRI. And he contributes most of his career and academic life in the area of digital information technology and telecommunications, including digital banking. So let's give our hands for Mr. Indra, who will also be presenting about the implications of fintech or digital banking for banking businesses. Mr. Indra, the screen is yours.
Thank you, Pak Herman. So Honorable Pak Purbaya Yuda Sadewa, as the Chairman of Indonesia Deposit Insurance Corporation, all the distinguished speaker here, and my also regulator Pak Iman Shah, as the Deputy Commissioner of OJK Institute and Digital Finance, John Frost, and also Pak Carlos. Yeah. So good afternoon, good morning, and good day, whatever your time. Yeah, and also Assalamualaikum warahmatullahi wabarakatuh. Thank you for having me. So I would like to maybe share what is our perspective on the fintech and also digital banking impact on the digital on the banking side. Who will share the slide? Okay, thank you. Okay, next. So I'll start with the context first. Yeah, what is actually become the current circumstances here in our financial and sector environment, and also next about what is the new business models on value creation through digital transformation, and the last maybe a use case what is Bank BRI is doing here to transform into a digital and also supporting the new digital ecosystem. Next. So I think next. So I think we all are aware that we move into new normal, that we are entering into a less contact and environment where the emerging digital ecosystem is coming in many sectors. So no new digital platform is coming in any emerging ecosystem, like in agri-tech, in food tech, and also in the health tech and online e-commerce. But then the tech player is also expanding their portfolio into financial solution. They also provide digital payment, online investment, digital lending, and also some of them also entering into digital banking. So the financial services is also becoming the embedded financial solution to enhance and also complement the digital platform. And also in the back end, I think the operation of business now is also changing. We adopt into new way of working, more adopting into flexi working, and then also as speed is becoming something that is a mantra of current environment. So to be able to create value to the customer, I think collaboration and partnership is becoming key. So we are entering into a collaborative economy where we open our system, collaborate with partners in order to deliver a solution to the customers. So COVID is accidentally accelerating the digital transformation in all sectors. Next. So I think we also see the race and the competition is intense in the financial services. The emerging types of financial institution has also been presented by Iman Shah. There is a neo-digital bank that deliver their service through digital channels, and also there is a traditional bank that also transform their services into digital in the hybrid mode. Also leveraging the physical presence combined with digital capabilities. And also there is a raising of fintechs that come with the new categories, slicing the financial services into a number of new categories. But we also can see the implementation or the fintech contribution in terms of providing the more engaged solution, hyper personalization, but in the same time also adopting new technology in bank. So we can see Indonesia is quite leading in terms of providing the new customized, more hyper personalized solution like provided by fintech, a digital wallet fintech, a GoPay, OVO, Link Aja. But bank, the tier one bank is also quite good in terms of investment in the technology to adopt the shifting into digital capabilities. Next. I would want to say that the internet and mobile in Indonesia penetration is never been as good as today. Reference from ICT ministry that currently the digital literacy is already above 100%. It's 30% above the population. It means that the ownership of device, handphone, mobile device is already quite expanded in every hand of the people. But from digital literacy into financial literacy there's a gap. Not everyone, not every people are convenient to do their financial transaction or apply for digital lending through mobile device. But some of them, especially in the remote side, they are still more convenient to be served through human touch, through the account officer that serve them through O2O models. On the right, right side of the picture, on the right above is actually we are thanks to fintech. Yeah, fintech is really accelerating the adoption of digital literacy and financial literacy. That now people are get used to do the digital payment, QR payment, yeah, the mobile payment that really being supported by fintech. And I think also there are a number of category in fintech that also raising in the market. The top one is the P2P and also payment. Yeah. On the left, bottom left, it's I think there is also shifting paradigm in banking. Banking is shifting from closed system in banking with the IT system, serving their customers through branches, also through their channel in the ATM, in the IDIC, through contact centers, and through the mobile banking. But now bank is, I think, is being forced to be more open. I think banks should be realizing that now customer is really in control. Yeah, we are shifting into open banking era, where we need to open a massive collaboration with new partners with that never been done before. And currently, bank is building a collaboration with fintech payment, e-commerce, right, sharing, travel site, yeah, in the open banking through mobile device for the to access the services to the customer. On the other side, it's really exciting to have this lot of innovation coming, but on the other side, there is a scary thing also coming because of the collaboration with third parties is quite massive. So there's also raise in terms of threat, fraud, and also digital and cybersecurity issues. On the right bottom, I think there's also phenomenon as also explained by Pak Imansyah. There's a phenomenon that financial sector are transforming into digital. Bank, the old bank like us, BRI, is also transformed digitally. We are adopting the model we call hybrid bank or phygital, physical and digital, in terms of how we can serve a customer better. But also there is a category of digital bank that they are providing their services through digital channel and collaborate with the ecosystem, like ride sharing or e-commerce, to form a combination between digital bank and the ecosystem player. Next. Yeah, I think fintech is keep coming with a new category that is enriching the finance services in the digital economy. So it's also potential to be a partners and collaborate with the banking as also agent point of bank. Yeah, next. But next, we also see a number of category coming from fintech, and there is also a fourth cohort that coming as a player in the new digital banking. There is a digital bank that coming from traditional bank like Blue from BCA, the digital bank from BCA. There's also Bank Raya from BRI. Used to be a very agro. There's also digital bank coming from a non-financial conglomerate like Elo Bank. There's also from a mega corporation. There's also a motion banking from a media company. But the third category also, so there is a bank that coming from fintech. Yeah, the Akulaku also newcomers bank, and also there is a category that tech players, tech platform also entering digital bank like Bank Jago, C Bank. Yeah. Okay. So I think there's a really to win the competition. I think there's a major factor to create the sustainable business models. Next. Okay, so I think the regulator is quite supportive into driving into open banking and also digital business. BI, the central bank, also driving into open banking environment to make the collaboration across the players are getting more faster and massive. Also on the commercial bank, there's also a new regulation from OJK to support the license and transforming into a new digital bank, yeah, and also adopting new type of regulation more on the principle rather on the rules. Yeah. So this will increase the optimism in terms of launching the new digital services and digital banking faster. Next. But there is also the risk, yeah. As we see, there's a evolving cybersecurity threat. Apart from there's opportunity in the unbanked people, but we see also opportunity that unbanked people will enter into financial literacy, with acquiring or adopting new financial services. But there's also risk in that evolving and increasing in cybersecurity threat. Malware, SIM swap, ATM skimming, social engineering is also becoming the new threat and risk, the digital risk coming into attention, yeah, to really mitigate the new type of risk that coming in the operational risk. Okay, next. There's also homework for us that as we enter into more collaborative digital economy, so the data is getting exchanged, how to really have a data privacy protection is becoming now the concern of many economies and also investors to really comply with the data privacy. And I hope that the data privacy protection regulation also will be imposed, yeah, Indonesia to really create the more secure and assurance for data privacy protection. The other one is also we have to realize that enter into digital financial services. I think our foundation is the operators. The mobile operators is the foundation for digital economy. For any digital or financial services, we will then link with financial or mobile numbers for authentication, for KYC. Then we use mobile numbers for OTP. But in terms of regulation, they are separate. Yeah, ICTs are regulated by ICT Ministry. The financial regulated by OJK and Central Bank. But there is the area that there is no one regulate, yeah, in terms of a contact offer, how to have a really the blacklist repository together if to make the response if something happen or fraud coming to respond very quickly across the industry is something that has to be a cross-sector collaboration. I think this is also homework for us to really address by the regulators and also the player and all the sectors, not only bank, also fintech, also telco, also OJK, also from the police to really mitigate this risk. Okay, next. Yeah, I think we are all aware that digital transformation is a must, it's not a choice. Yeah, next. But bank or established firm like traditional bank like us, next please, has to transform digitally. I think we have to take a two-prong of path. Yeah, first is the digitize. Digitize means we transform in the business process, make it more automate, make it more efficient. The process make the services getting faster and more productive. But we also have to explore new business models through the transforming the business models. Yeah, tapping new market and also finding a new source of growth. So these two bimodal strategy is really become the hybrid strategy to be taken. Yeah, digitize and digital, transforming this process and transforming the business models at the same time. Yeah, next. Yeah, I think there is a challenge or also how to be able to transform digitally. I think there is a challenge in terms of talent is different in terms of competence, practice, and mindset. Also different in terms of culture. Yeah, have to be more agile but stable. But now digital is really based on data driven. Yeah, and also the resource. The legacy bank like us, it has to be ruined and changed with the platform that really flexible, can adapt with highly configurable capabilities. And at the same time, we also have to embrace partners in a massive collaboration to open innovation ecosystem. Okay, next. So entering into deeper, broader, and smaller segment, I think how to be able to have a really quality credit underwriting. I think the role of data, new data, unstructured data combined with the existing data taken from utility, from mobile providers, from social media, is really important to enhance how you can build the credit underwriting score that are really able to serve on the ultra micro segment. Yeah, the small size dig down into a broader target of the market. Next. And as we know that our bank is then being integrated with other company, the PNM is the group lending that playing in the empowering the lower segment under bank and still unfeasible for banking, but we need to empower them to be go into next level, and if they are successful, then we go into more bankable level, then bank will play a role. And also there is a pound a company like Pegadaian that provide gold saving. Yeah, it's also expanding the new category of saving, gold saving. So it's kind of how to complete and in terms of solution to serve into micro and ultra micro segment. Okay, next. And how about BRI? Yeah. Next. So our company is actually the largest microfinance institution in the world. We are already 126 years this year, December, and we are our aspiration is to become the most valuable banking group. Yeah, not only bank in Southeast Asia, and champion of financial inclusion by 2025. Currently, we have unique customers is 137 million unique customers. I think we are the largest customer base in the country and even in the region. Yeah, we serve in the remote side, and also we have an agent that serve in the villages around 60. I think we are present in almost 60,000 villages all over the countries, yeah, through our agent. Currently, we have close to 500,000 agents that serve basic banking services, apart from our outlet, around 9,000 outlet, and also our digital channels. Yeah. Next. So, as the largest microfinance institution in the world, I think we are hoping to be serving broader, deeper, and smaller, and how to serve as much as possible people to do a lot of as much as possible transaction at the cheapest cost. So the answer is digital. How we can serve into go smaller size, yeah, and it's shorter tenor, no longer years, but day or week, yeah. The tenor is getting shorter and also faster. So the answer is digital. To cope with two issues. First is to reduce the overhead costs, and also to reduce the operational risk. Okay, next. So this the strategy to transform. We digitize the current core traditional services in the lending centric, in the saving centric, and also the agent centric. And also we are entering into digital ecosystem. We are entering into new emerging digital ecosystem. We enter into agri-tech, edu-tech, health-tech, yeah, and we provide the embedded finance to support the value chain that across to in terms of payment, funding across the value chain. We also open bank as a platform. We open our API to have a massive collaboration with fintech, fintech payment. Then on the right side is we also try to follow the customer journey. We tap into any front end, so you can open our saving account through Grab, through ride sharing, through e-commerce. Yeah, you can also apply for lending through a number of front end that customer really want to have that front end, not necessarily to be from our front end. Next. So our aspiration is to be the hybrid bank. How we are combining our strength in terms of physical presence combined with digital capabilities. So whatever the channels, we will enhance with the capability to be able to more engage with customer and also reduce our risk management more efficient, supported by big data and AI. We call it Berry Brain. So Berry Brain is become the central brain to really engage our customer and also reduce our digital risk. Next. So this is the digital bank that we have, yeah. So everything can be served through digital, digital channel. But we, as you can see, we build the ecosystem, also collaborate with fintech. Okay, next. So bank also like us is also transforming bank become fintech. Fintech, as you see, to process the loan from before is 2 weeks. And then 2 days, now it's become 2 minutes, just fully digital process, digital verification, digital signature to provide this. Okay, last one, next. So as central brain is become very important, the berry brain. We focus on really attacking on how to be more engaged with customer, also reduce the risk management more efficient in the credit scoring, in the merchant scoring, the customer insight, and also in the fraud detection. Next. So with the strategy of build, borrow, and buy, we then collaborate more with fintech. Yeah, we build the ecosystem to connect with fintech. We also partner with them. We also invest in fintech and also non-fintech. I think by having this, hopefully we can serve more broader, deeper, and smaller, and hopefully no one left behind. Thank you. Back to you, Pak Herman.
Thank you so much, Mr. Indra Utoyo, for your compelling and very insightful presentations. So again, please allow me to summarize what Mr. Indra has elaborated for all of us. So there are 4 points that I can summarize. First, Mr. Indra said that we are moving to open banking era, in which with the technology of API, this will be a banking model of the future. And then the second one, we have seen as well how are the Indonesian fintech map and digital banking in Indonesia. The third one, there's one opportunity that Mr. Indra has shown to us, in which how to match the unbanked people and being cautious with the cybersecurity threats. And then the fourth, we have seen from Mr. Indra presentations the digital transformations that has been done by Bank Rakyat Indonesia, one of the big banks in Indonesia. So with their digital DNA, they serve the ultra micro segment with big data, as well as through the BRI hybrid initiatives. Again, thank you so much, Mr. Indra, for the presentations. And next, we move to our fourth speaker today, Mr. Carlos Colau. So he is the senior expert at the restructuring and international coordinations area of the Spain Deposit Insurance Agency. Mr. Colau counts with a wide and real-life experience in the field of supervisions, resolutions, and deposit insurance by having years of experience in Spanish Deposit Insurance Agency, or FGD, Spanish Supervisory Authority, Bank of Spain, and the National Resolutions Executive Authority. Without much further ado, please let us welcome Mr. Carlos Colau, who will be delivering on the implications of fintech or digital banking for banking business. Fintech and digital banking view from DGS perspectives. Mr. Carlos Colau, time is yours.
Thank you very much, Herman. Good afternoon, good evening, and good morning to everyone. It is a real pleasure to be here today. Before I start, I would like to thank the Indonesia Deposit Insurance Corporation and Mr. Purbaya for inviting me to this webinar and giving me the opportunity to talk to all of you today. Today, I will be giving a general overview about the European Union and Spanish fintech landscape from a deposit insurance system perspective. Since the work performed in these areas is very extensive, as we had a chance to see, I wouldn't try to cover all the aspects, but focusing in the ones I personally consider more relevant for deposit insurers. Please, could you upload those slides? Thank you. Could you move to the next slide, please? Okay, as you see from the agenda, I will start by giving a definition of fintech and then by providing a regulatory fintech snapshot of the European Union and Spain. After that, I will briefly stop at identifying the fintech challenges and opportunities that fintech poses to deposit insurance systems. And finally, I will be concentrating on a topic that I consider very relevant for deposit insurance and that has gained more importance as a consequence of fintech, which is the so-called beneficiary account. Please, could you move to the next slide? Okay, let's start with something so important as trying to define what fintech is, right? It is a term that everyone uses, but I personally find somehow difficult to provide an exact definition. For this purpose, and as also mentioned by John Frost in his presentation, I believe that the definition provided by the FSB is very clear and illustrative when fintech is defined as technology-enabled innovation in financial services that could result in new business models, application processes, or products with an associated material effect on the provision of financial services. It is also interesting to bring your attention on what IDIC indicates in its core principles about fintech and deposit insurers. This vein, as you can see, it states that deposit insurers should make efforts to stay abreast of financial inclusion initiatives and associated technological innovation occurring in their jurisdiction, particularly those affecting unsophisticated small-scale depositors. Please, could you move to the next slide? Thank you. The next one, please. Thank you. Now let's proceed highlighting the most relevant fintech initiatives that are occurring in the European Union and Spain. As mentioned before, I do not intend to cover all the topics, but only identify what I believe are the most significant fintech aspects. I have divided these fintech topics by distinguishing between the European Banking Authority, European Commission, and then finally I make a very brief remark about the European Central Bank, the ECB. Let's start with the EVA, the European Banking Authority, which works to ensure effective and consistent prudential regulation and supervision across the European banking sector. Okay, in this respect, the EVA has issued what they call a roadmap to fintech, where as you see, they have set the following priorities. Okay, first one, monitoring the regulatory perimeter, including assessing current authorization and licensing approaches to fintech firms, and analyzing regulatory sandboxes and innovation hubs. So why they do this? So mainly to identify a set of best practices, to enhance consistency, and to facilitate supervisory coordination. Okay, the next one, monitoring emerging trends and analyzing the impact on institution business models and the prudential risks and opportunities arising from the use of fintech. Following one is the promoting the best supervisory practices on assessing cybersecurity and promoting common cyber threat testing framework. And finally, addressing consumer issues arising from fintech. As you see as well, the 2021 topics for the EVA are the digital platforms, which are technical infrastructures that enables financial institutions directly or indirectly to market customers on or conclude with customers contracts for financial products and services. Here we can find the depositor platforms that we'll be talking about later. Okay, the RegTech, regulatory technology, which is defined as any range of application of technology-enabled innovation for regulatory compliance and reporting requirements implemented by a regulated institution. And finally, other relevant topics such as the artificial intelligence, digital entities, subtech, and data-driven innovation. Okay, let's move now to the European Commission. The European Commission adopted on September 24, 2020, a digital finance package, which comprises the following priorities, as you can see in the slide. The first one is to tackle fragmentation in the digital single market for financial services, thereby enabling European consumers to access cross-border services and help European financial firms scale up their digital operations. Second priority is to ensure that the EU regulatory framework facilitates digital innovation in the interest of consumers and market efficiency. The third priority is to address new challenges and risks associated with the digital transformation. To ensure that digital transformation enables better financial products for consumers and business, this risk must be addressed. Okay, and the priority is to create a European financial data space to promote data-driven innovation, including enhanced access to data and data sharing within the financial sector. Please, could you move to the next slide? Okay, the ECB. It's also interesting to highlight that the European Central Bank issued back in 2018 a guide to assessment on fintech credit institutions license application. What it is included a fintech bank definition. This is similar to the IDIC digital bank that Mr. Imancia was commenting in his presentation, but in this case we have an express definition, which is, as you see there, a business model in which the production of and delivery of banking products and services are based on technology-enabled innovation. Okay, and finally, let me stop briefly in Spain. Among other topics, I have identified the regulatory sandbox. Okay, the main features are, as you can see, it is regulated by a law where it is created a control testing ground with a wide entry criteria and wide acceptance. It is open to any interested sponsor, also individuals, no license or authorization required, and is open to all nationalities as long as the project has an impact in the Spanish financial system and is launched on a half-yearly basis. Okay, the objectives, as you can see, is to foster technological innovation, improve the access to finance and harness talent, provide mechanisms to improve the regulation or the exercise of the financial supervision in a digital context, and finally, to increase the efficiency, the quality of services, and the protection against new fintech risks. Okay. Finally, it is worth mentioning that in Spain, we established a cryptocurrency registry for providers of virtual currency exchange services and custody of electronic wallets. This registry is subject to natural and legal person, whatever the nationality is, that offer or provide these services in Spain. Okay, and they must be registered in the register established for this purpose and the Spanish Central Bank, Bank of Spain. Please, could you move to the next slide? Okay, the next one, please. Thank you. Okay, after this brief introduction about the regulatory overview of the fintech EU Spain landscape, let's start focusing more on the field of deposit insurers. In this vein, fintech poses important challenges to deposit insurance systems. Okay, as you see in this slide, I have identified the following ones. Okay, deposit taking platforms. These digital platforms have the main purpose of connecting their customers with different product banks, usually located in other jurisdictions, with the aim of enabling these customers to open accounts at such banks. Okay, the purpose of it is usually to get more returns on their money by placing them in those banks, like better interest rates. On the other hand, product banks can expand their financial channels and reduce costs without having to establish their own retail infrastructure in each jurisdiction. Okay, fintech has increased the use of these platforms and poses important challenges mainly to deposit insurance systems and banks, as I will be describing later. Like, should these accounts be covered by the corresponding deposit insurance system? If so, how to identify this type of clients and how to correctly calculate the premiums that the banks have to pay the deposit insurance system for such accounts. Okay, we also see challenges in the European Union when credit institutions are using their European Union passporting license to directly take deposits from other member states. Those deposits are guaranteed by the deposit insurance system belonging to the member state where the credit institutions are located. So it raises some operational issues in a potential payout event. Okay, deposit-like products. Likewise, we're seeing an increase of deposit-like products that fall out of the scope of protection of the European Directive, like e-money institutions or payment providers. In this respect, the European Directive on Deposit Guarantee Scheme expressly states that electronic money and funds received in exchange for electronic money should not be treated as a deposit and should not therefore fall within the scope of this directive. Since the use of this deposit-like product is increasing, it poses relevant challenges for policymakers and deposit insurance systems, so they can end up having as well financial stability implications. Okay, and let's move now to the instant payment systems. I'm sure you all know there are electronic retail payment solutions that process payments in real time, and it's always open 24/7, where the funds are made available immediately. Although, of course, it's a very good initiative for customers, it raises some challenges, like increase in deposit volatility, especially when the credit institution is facing problems, and the need to work closely with the industry to ensure that the clearing and settlement systems are well prepared in case of failure. Okay, so please could you move to slide number 9? Thank you. Okay, let's move now to fintech opportunities for the deposit insurance system. I have identified mainly the following ones. Okay, improve the deposit insurance processes. The system can adapt and benefit from fintech. Additionally, pandemic has raised important challenges like making sure that deposit insurance systems can make a remote payout and that depositors can receive their money without the need of going physically to a credit institution branch. In this regard, I believe that it's necessary that the deposit insurance system reviews its payment processes to take advantages of fintech like website solution apps. For example, in Spain, we pay out by electronic transfer, and we have implemented a website solution for this purpose. Also, I believe that the fintech is important for improving the data reporting processes by credit institutions to the deposit insurance system, which is necessary to calculate the premiums that banks have to pay to the deposit insurance system, to perform stress tests, and one of the most important things, to improve the single customer's view files in order to ensure a high quality of those files and to ensure also that they can be rapidly sent to the deposit insurance system in a payout event. Moreover, I think that fintech is also a great chance for fostering public awareness, like working more closely with policymakers and financial authorities and deposit-like products such as e-money. Additionally, it is also convenient as well that the deposit insurance system have a higher proximity with their members, with the member credit institutions, in order to be aware and get a better understanding about the different fintech products they can develop, and also to be well informed about the digitalization process. Okay, I think that there can be interesting synergies from the deposit insurance system in this field, and that they can take advantage from it. We cannot forget either the importance of the deposit insurance system for promoting financial inclusion. Fintech definitely could enhance this role. This key function of financial inclusion can also be reinforced with the great opportunity that fintech offers deposit insurance systems to expand and improve the communication channels with depositors. Okay, please, could you move to slide number 11? Thank you. Okay, let's now stop briefly and talking about beneficiary accounts. Okay, the rapid evolution of fintech has fostered the expansion and growth in the financial market of non-bank entities that provide payment transaction services. I refer mainly to electronic money institutions and payment institutions. That is what I call like fintech firms. Okay, fintech firms provide a relevant function mainly to retail individuals and facilitating commercial transactions. The growth of fintech firm has led to an increase of the use of bank accounts opened by these entities on behalf of their clients, with the main purpose of segregating and safeguarding the funds they receive from them. This is what we call the beneficiary accounts. Although beneficiary accounts can be used as general basis by credit institutions in their ordinary operation, its importance has been growing as a consequence of the interruption in the market of this type of entities. Likewise, beneficiary accounts opened by fintech firms can in practice have a high number of clients, so the treatment for the purpose of protecting these funds and were appropriate offering deposit insurance system coverage is acquiring greater relevance. In general terms, the use of beneficiary accounts by fintech firms constitutes a measure to safeguard the money that they receive from the clients. As you see in the slide, the fintech firm receives the money from its clients. Such funds are placed in a bank opened by the fintech firm on behalf of their clients. So the holder of the bank account would be the fintech firm, but the beneficiaries are the clients. Please, could you move to next slide number 12, please? Thank you. Okay, in this slide, I will explain a particular case of deposit platforms that I had the opportunity to mention previously when I was referring to digital platforms. In this case, and as a difference from the beneficiary accounts mentioned in the previous slide, the main purpose of depositor platforms is to provide a service to their clients by allowing them that possibility of opening bank accounts in other banks, product banks that they choose and where they can obtain positive returns for their money. As you can see in the chart, the general structure that clients follow is to use a deposit fintech platform in which they can select the different product banks where they would like to place their funds. At the same time, the fintech platform is associated with a bank where the clients have to send the funds. And it's this associated bank the one entitled to open the accounts in the product banks on behalf of their clients. Okay? In this case, we will find ourselves in the same situation as the beneficiary account described in the previous slide, since the account holder would be the associated bank and the clients would be the beneficiaries. However, not all the depositor platforms involve the use of beneficiary accounts. As you can observe in the chart below, depending on how they are structured, clients may also have the possibility to open the bank accounts directly in the product banks, where the clients would be the direct holders of such accounts, and therefore it does not involve an associated bank to act as an intermediary. In this case, there would not be any issue since the clients would be the direct holders of such funds. Please, could you move to the next slide? Okay, in this slide, I briefly stop analyzing the operational challenges for the deposit insurance system in the case of coverage protection is granted to these beneficiary accounts. Okay, I identified two important questions. In the case of beneficiary accounts, how can the deposit insurance system know who the ultimate beneficiaries are? Since, as mentioned previously, these bank accounts are opened by fintech firms on behalf of their clients and can actually have a high number of clients and high amounts of cash. That raises important questions mainly to deposit insurance systems and to the banks. The first one is how to obtain the information about the beneficiaries' clients by the credit institution. This is important not only to be able to send this information by the credit institution to the deposit insurance system in a payout event, but also to provide this information in a regular basis to be able to include the correct amount in the calculation base to pay the premiums to the deposit insurance system. This is challenging because these accounts have usually high volatility of balances and customers, and because the fintech firms who are the holders of such accounts can have some concerns with sharing such information with the credit institution because of data protection issues, competition, etc. Okay, so the next question of how to handle clients' funds by this becomes a very relevant issue. In peacetime, it needs to have the precise figures of the deposit insurance system, potential obligation, setting the appropriate contributions to pay by credit institution to the deposit insurance system, and performing stress tests to validate the information about beneficiaries. And in a payout event, in determining the coverage amount to be paid to the clients and determining as well to whom does the deposit insurance system should pay, directly to the fintech firm or directly to the beneficiaries of the fintech firm. Please, could you move to slide 15? Next, thank you. So after this explanation and in the previous slide, that takes us to the question, so electronic money institutions and payment providers beneficiary accounts be guaranteed by deposit insurance systems. In the European Union, the regulatory framework is unclear about deposit insurance coverage of beneficiary accounts if the holder is an electronic money institution or payment provider. But by contrast, it is clear that the balances from eligible depositors opened by other firms on behalf of their clients in credit institutions shall be guaranteed by the deposit insurance systems. Since the European Union framework is unclear, that creates currently unlevel playing field issues, among member states. It is also convenient to highlight that the European Banking Authority just issued on October 27th an opinion with a set of recommendations to the European Commission about this issue, where, among other topics, it encouraged the Commission to clarify the protection of clients of beneficiary accounts opened particularly by electronic money institutions and payment providers, and ensure that these funds are taken into account for the calculation of the premiums to the deposit insurance systems. As you see in the chart, I have identified some arguments in favor and against these protections. In favor, harmonization of depositor protection across the European Union, financial stability reasons, and against higher costs for credit institutions, misleading coverage information to clients, and moral hazard. Please, could you move to next slide? Okay, the following, the next one, please. Thank you. Okay, so to sum up about this issue, it is advisable to define the clear scope of the deposit insurance system coverage on beneficiary accounts regarding these fintech firms. Once defined, if it's positive, if we cover them, it is recommended to have regulatory standards to address the operational challenges for the deposit insurance system, as I had the chance to mention before, such as the fintech firm should need to provide accurate data to credit institutions, and thereby to this, ensure that clients' funds are taken into account for calculation of deposit insurance system contribution premiums, determining to whom the deposit insurance system payment is made, account holder or the ultimate beneficiary clients, as mentioned before, and the need to stress test beneficiary accounts. Okay, so that's all. Thank you very much, and happy to take any questions you may have. Back to you, Herman.
Thank you so much, Mr. Carlos. That was a really compelling presentations that are very related to the deposit insurance systems in the future. Thank you so much. So if I would like to summarize several points that Mr. Carlos has made during his presentation. So the first one is this. Mr. Carlos points out the importance of a clear scope of deposit insurance coverage of client funds. And then there's also the importance of the accurate single customer view or SCV data to identify fintech beneficiary accounts. So we are aware that we are facing complexity, and this is the main challenge that will be faced by the deposit insurance in the futures. And then lastly, the importance of fostering public awareness about the emerging of the digital technology and the transformation of the digital banking industry is very important in this sense. So again, thank you so much, Mr. Carlos, for the very good presentation. So now we are having several questions for the speakers today. So we will have around 15 minutes of discussion. So please allow me to read several questions that have been going through the slider. So the first ones. So we have heard from Mr. John Frost's presentations about the trends of the big tech firms are rising much more than the small fintech firms during these several years. If I'm not mistaken from Mr. Frost's slides, that trend has actually started in 2018 instead of right on the pandemic. So the questions from the audience is that, what should regulators do to promote more competitive business environment in the digital financial services industry in this sense? So that is the first question. So I would like to ask for Mr. John Frost's comments on this.
Absolutely. So yes, it's true that big tech has been growing in financial services for several years now, and this shift that we see at global level did indeed start prior to the pandemic, and if anything, the pandemic has accelerated it, which I think is a trend we've also heard from other speakers about. So there is, a difference in how this impacts competition in the market. In an initial stage, of course, big tech players enter the market, and the market becomes more competitive. The banking sector faces competition from big techs. That's a good thing. But there is this risk that as time goes on, big techs will dominate the market, and there will be less competition. So there are a few ways of guaranteeing competition. One of them is to ensure interoperability. So regulation can seek to do this. For instance, by requiring that digital payments are interoperable across different platforms, that there are no fees for taking out funds from a big tech wallet provider. There are also, we heard about open banking and APIs. There are a lot of opportunities there to make data exchange possible across different players. That's another means of ensuring competition, that different players can access the user data with user consent, and that they can all offer services. But as I mentioned in my presentation, I think an especially powerful set of policies is around public infrastructures. So we've described in writing and in research how fast payment systems can be one such infrastructure. India, for instance, has had very good experience with their UPI and requiring that the big techs, the banks, all the different players operate on a single system. That enforces interoperability. It means that anyone, regardless of where they have an account, can transact with anyone else, that fees are regulated, that the data exchange is regulated. And again, I think in China and a number of other countries, central bank digital currencies are seen as a public infrastructure that could allow big techs, banks, fintechs, everyone to compete on a level playing field, providing payment services, and then other financial services built on top of that.
Thank you so much. Excellent. That is a very clear answers on the questions. So let's move on the next questions. So the next question is directed to Mr. Indra Utoyo from Bank Rakyat Indonesia. So the question is that in your presentation you mentioned about the focusing of the Bank Rakyat Indonesia on the ultra micro segment with big data. So that is from the BRI or from the bank side. So do you face any challenges on applying this to the ultra micro business players? So because most of them probably are not digital literacy yet. So does Bank Rakyat Indonesia has any program related to this so that the innovations not goes from the supply side only, but also can be accepted and easily adopted from the sides of the these small medium enterprises sides? Could you please elaborate on that, Mr. Indra Utoyo?
Yeah. Okay. Yeah. As we expand our service into ultra micro, yeah, as a new source of growth, and I think our strategy is through digital as much as possible. So I think one of the strategies to combine data across the three companies, yeah, and then we also to have more insight of the customer, that we combine the capabilities across the three companies. The other one is also we understand that we need to dig data for Ultramicro that we capture from many sources of data, including from telcos, yeah, from social medias, from utilities, and I think that will enrich our data and hopefully is improving our profile. But at the same time, we also still deliver the service maybe through our O2O models, online to offline. So it's not all, goes to the digital channel, because the people on the ultra micro is sometimes is still not convenient to be adopt directly to the digital lending, but they prefer to be served through human touch. But we will empower our account officer as a financial advisor. Yeah, I think enhanced by the data that really improve their understanding, their insight. They also understand the customer better, having better recommendation to serve the customer better. I think that's combining from the internal, the collaboration with others, and also getting new source of data from other sources. Yeah, as I mentioned earlier on, and also through range of solution, not only digital but also O2O models, online to offline. Hope that answered the question.
Okay, thank you so much, Mr. Indrato. Yeah, I think that answers the questions really detailed on it. So the combinations of the data analytics and as well as the training of the account officer as a financial consultant, that will definitely solve the challenge. Thank you so much, Mr. Indrato. So we have another questions. Here is directed to Mr. Imansyah from OJK. So Mr. Imansyah, earlier in your presentation, you mentioned about the blueprints of banking digital transformation. So from your viewpoints, how is the big pictures of the Indonesian banking industry 3 or 5 years from now, according to the banking digital transformations blueprints?
Thank you, Pak Hernawan, for the question. This is a very tough question. It's just like you are thinking about the future of our banking industry. So the blueprint is something that we are providing for the industry as a guidance, right? But anyway, people have own, appetite. I think big banks, mid-sized bank and small bank, they have their own business plan where they're going to be in 5 years from now, right? So I think to some extent, from my own perspective, the idea of consolidations, of banking consolidation is still there, right? Because we take into account how we are having our supervisions in a very effective way, then we are talking about how we are still managing the idea of consolidating our commercial banks in particular. So with that idea, I think we are talking about that you were talking about the number of the banks, and we are talking about the trend of digital banking, having also the commercial bank acquiring the digital banks. So I think in the future, something that the commercial banks must providing something that really maintaining as well the loyalty of the customer. So providing services that the customer really needs. So that's really adjusting the framework of the type of the business and services that the bank as well as digital bank can provide its customer, and maintaining the loyalty, because I mentioned before, because using the platform is something that people can move themselves, even their money from bank to other banks, right? If these banks we didn't having the platform, and I think they are not really competing with the other banks. So I think that will hindering the business of the banks. So I think in the future, that's really the idea on how we are. Well, we have the guidance already, but I mentioned before, we are talking about something that banks have to compete, bank has to improve and to enhance their business, their services to the customer. Otherwise, then they are behind by the trend within the banking industry. This is something that I mentioned in particular for, well, compared to BRI or Pak Indra Utoyo, as well as the other what is it? Maybe in particular the state-owned banks, but and also the big banks, the other big banks, we consider as systemic banks. But the small banks, they are having big challenges on how they are moving forward, and how they are acting or share the key market, the business market, the bank market, market share in the banks, competing with these big banks or mid-sized banks that already moving very fast into digitalization. So I think again, well, we are hoping, I think some years ago, we're talking about like maybe on average about like 50 banks is at the utmost number of that we having in the future in our banking industry. So that's the idea. And I think when we have this smaller number of the banks, it will also affecting the functions, the role of the IDIC in the future, right? So you are not building what is it, extra effort how you oversee the small banks, but you are now engaged with the quote unquote systemic banks. And then we're talking about the resolutions in our laws on the finances prevention and resolutions. So something that we are talking about more bail in, not bail out anymore. So I think that's really positive ideas when we have smaller banks, but they are bigger banks, and also providing more services, more efficient services to the customer. And I think that will be facilitate with the idea of having also digitalization in financial sector. So now I won't come up with like a number, exact number, but the idea is still hopefully by having also digitalization in the banking industry, we are having in the future and also can exercising the idea of the consolidate of the bank consolidation in our market. So I stop here, Pak Hernawan. But yes, we have this blueprint, but still blueprint. And how we assessing it takes some years. But the idea of banking consolidation is still there, and I think it will bring a lot of benefits, including yourself from the Indonesian Deposit Insurance Corporation. I'll stop here and back to you, Pak Herman. Thank you.
Comprehensive answers on that. So if I could summarize it in one sentence, so the futures of Indonesian banking industry in 3 and 5 years is just brighter. So basically what you mentioned is that Indonesian banking industry becomes more customer-centric, so that the trust and the confidence of depositors as well as all of the bank customers are increasing, and banks are becoming having more roles in promoting economic growth, but on the same time, they are becomes more stable so that the economy can grow more stronger post the pandemic. So again, thank you so much, Mr. Imansyah. That is a very great. And for the audience, if you would like to see the banking digital transformations, it's all available on the OJK's website. There are a lot of information there, and people from the outside of the Indonesia can see the information as well there. And you can also visit our website on the www.lps.co.id to access information about Indonesia Deposit Insurance Corporations and our distribution of deposits data. So again, thank you so much, Mr. Imansyah, for the answers. And I think we have several more questions, but let me try to summarize into one big question for Mr. Carlos Colau from Spain. So basically, so the question is related to the complexity. So you mentioned that complexity is actually the main challenge in this rising of the digital trends in the financial services industry. So how does the FGD, Spain's deposit insurance agency, face these complexity challenges? And then do you have any elaborations on the roles of the RegTech on doing this?
Yeah, thank you, Herman. Yeah, as I mentioned, yeah, fintech is very it's positive, but of course that makes us that have to adapt very fast to the market, right? So yeah, we follow track about everything. We have to work very closely with policymakers, with our member credit institutions, and also analyze all the new deposit-like products, like I was mentioning before, like e-money payment providers. That faces a lot of challenges. Their accounts that could be very complex, as I mentioned, because they could have a lot of clients and with a high level of amounts as well. So in a payout event, that makes us to be aware of such accounts if we cover them, of course, and closely work with this credit institution. So I think, yeah, the reporting issue, going also to part two, talking about RegTech is clear. We need to have clear, very clear, transparent, and accurate data of single customers' views. So that makes us as well improve our processes for that. And be aware of everything that's happening now. It's very positive, but at the end, it poses a lot of challenges. So at the end, yeah, that makes us work hard and be very aware of everything. So yeah, thank you, Herman.
Yeah, thank you so much, Mr. Carlos Colau. That is very complete and elaborate answers for the questions. Hopefully that answers several questions that come in, so I summarize them into one. So again, thank you so much for all of the elaborations from all of the speakers. So actually, we have a few more questions, but because of the limited times, and I think we can save the questions so that we can ask it to all of you, if you don't mind, through the email from the rest of the audience. So again, thank you for the elaborations, and for closing the sessions, I would like to ask for if you have any closing remarks from each of you, if you don't mind. So maybe we could start from Mr. John Frost.
Just very briefly, I wanted to say that it's been a very rich discussion, and I think that in this area of digital innovation and digital banking, all of us are learning. The market is constantly evolving. We can all learn from each other, and I think that there's a very great value in international collaboration, international discussions that we can each learn from one another. So thanks to the other speakers. Thanks again to IDIC for organizing. And I'd be happy to stay in touch.
Yeah, thanks, John. So the next, Mr. Imansyah, could you please give some closing remarks for all of us?
Thank you, Pak. Just two quick points I want to share as just sum up my presentation as well as the discussions that we had already. First is, well, the digitalization finance sector, in particular here in Indonesia, I think is bring about a lot of changes already to our financial sector ecosystem, right? So I think to some extent it will affecting as well the role of IDIC in the future, in particular how IDIC with other member of the KSSK maintaining financial system stability. I think, to my understanding, we had a lot of exercising simulations. So I think one topic that we can propose to the KSSK is about how we can see the future of IDIC within the ecosystem, within the digitalization ecosystem here in Indonesia. I think that really what I'm thinking about that we can propose to the KSSK. The second one is about whether there's we have this Pak Indra Utoyo mentions about the PDP, perlindungan data pribadi, as well as that we are now having also the effort to drop also the what we call this omnibus sector. So we have to put in mind that that member of KSSK again having the also synergy as well as the coordinations between themselves as well as the industry. Again, just take into account the digitalization. So in the future, we can still maintaining our system stability. So it's a big effort during this time for not only the regulators, not only the government regulators, but also the industry. So I think we have to work hand in hand. At the end, we can still ensuring that our financial system is still stable. So just that, finally, just want to thank you, the IDIC, for hosting this webinar as well as this very awesome speakers share insight and knowledge to ourselves in this occasion. So thank you very much again for the IDIC, the chairman of IDIC, Pak Sadewa, and also the other speakers. And I think I'll stop here. Then back to you, Pak. Thank you.
Thank you so much, Mr. Imansyah. That's very kind of you. So to give a closing remarks that are really compelling. So I still remember the Keshi word, bang is bang. So that is a very short phrase, but very strong and very great phrase for to give to our audience how the approach of the bank regulation and supervision in Indonesia. So again, thank you so much, Mr. Indra Utoyo and OJK, for your attendance in these events. We are really grateful and honored to have you here, Mr. Imansyah. So the next one, Mr. Indra Utoyo, please, if you have any closing remarks to all of us.
Oh, okay. Yeah. So I think we all agree that the digital transformation is a must, it's not a choice. And I think we are all entering into, it's kind of a new opportunity, and also there will be more collaboration that happen to really how we obsess to really provide value to giving value to customers, obsessed to the customers. And I think the keyword is how we can have more collaboration in terms of creating values. But on the other side, also we understand that this digital, apart from exciting new innovation, new experience, but the other side is also we have to collaborate in also fighting the cyber race together. It should be a cross collaboration across sectors to really mitigate the risk in this digital. We are as strong as the weakest, so that's why we need to collaborate. Thank you.
Yeah, thank you so much, Mr. Indra Utoyo. Collaboration is a must between regulators, bankers, and all of the financial services customers and supporting institutions on this industry. So again, thank you so much, Mr. Indra Utoyo. And lastly, Mr. Carlos Colau, if you have any closing remarks to all of us, please.
Yes, thank you very much, Herman. Yeah, as mentioned previously, I think it's key. With the increase of fintech, is key that the deposit insurance systems can identify the critical services and functions and increase their digitalization, of course, to also to have remote readiness of their IT systems. It's important that we can work remotely pretty good with any kind of problem, so we have to test that. Also, it's very important that cyber resilience connecting to that. And then also, finally, as I mentioned before, I think it's very important that we work closely with policymakers with deposit-like products, to be aware of the new products that come into the market, and to be sure that they have an adequate level of protection. Thank you, Herman.
Yeah, thank you so much, Mr. Carlos, for your closing statement. So, ladies and gentlemen, it seems that we have reached the end of our panel discussion. I believe all of you have learned a lot from these sessions, from our distinguished speakers. So I would like to thank all of the participants who have joined today and raising questions. And we apologize for those participants that questions cannot be answered yet in the panel, just because of the sake of times. And I would like to thank our esteemed speakers for their insights, especially Mr. John Frost, Mr. Imansha, Mr. Indra Utoya, and Mr. Carlos, to be able to provide your time and insights to all of us in this seminar. So again, thank you so much. Hope all of you have a good health always. Thank you so much, and may God bless us all. Thank you so much. Back to you, Ms. Sarawayne.
Thank you.
And thank you, Mr. Herman Zahiruddin, for moderating such a wonderful and fruitful discussion this evening. And thank you to all the speakers for giving us valuable insights for all of our participants this evening. And on behalf of Mr. Purbaya Yudi Sadewa, ladies and gentlemen, the chairman of IDIC, I would like to extend his apologies for having to leave sooner due to his inevitable duties. He would also like to once again give his highest appreciation to all the speakers, the moderator, and of course to all the attendees for your participation in today's webinar. And ladies and gentlemen, we have finally reached the end of the IDIC International Webinar 2021. May I remind you once again that if you wish to download the presentations from the discussion, you may and you can scan the QR code on your screen or type in the web address provided. We'd also like to invite you to complete a quick survey that is also available through Slido, as your valuable input is very important for us. And for those of you participants who are seeking for an electronic certificate or e-certificate, it will be emailed directly after this event. And if you have any remaining questions on the event or discussed topics, please do submit them to IDIC International Affairs through ghin@lps.go.id. And ladies and gentlemen, before ending this event, we are delighted to announce that IDIC will be holding an international seminar in 2022 in Bali, Indonesia. And we thank you for your attendance, and we hope to see you again in Bali, Indonesia next year. Stay safe and stay healthy. Goodbye.
Compared to 21,000 in 2021. During 2000,
Yeah!